All right. Thanks everybody for joining the meeting tonight. It's November 28th. And just a quick recap. Last time we talked about stock psychology and had a really good discussion there. I put the link out on the YouTube, and I don't know if everybody but can y'all see my screen?
Yeah, I can see it.
All right.
Yeah.
Yeah, let's see. So on YouTube, if you go out to YouTube channel, so there's you go to this playlist. So it's this stock, and so I put and so there's a so I have like a playlist. So if I go back to this playlist here, you can see the for these here, and so you can see the stock group here. And as we add different ones, I'll just continue to add them to this playlist. So it'll make it pretty easy for people to go back and watch them. So that'll be in here. All right. Yeah, so we had the stock trading piece, just talked about psychology last time. I think we had a really good discussion about it. And so if anybody needs to go back and look at that, they can go to that YouTube there. And then today, next topic, we're going to start talking about scaling trades and strategies. So it may go either one of those. But before we get into that, I want to say, did everybody go through and creating a free account on tradingview.com? Because this is the charting software we're going to use. And so if you haven't, I encourage you all to go out and create an account out there. And it can work on your desktop as well as mobile. So I have an iPhone, so I can look at it on my phone. But I'm actually showing you all on the actual computer here. And so one thing I wanted to go through is, and I encourage everyone to do this, is to create a watch list. So this very first icon on the upper right-hand corner is a watch list. And on a free account, I think you can get 2. So it's like watch list 2. So this is all my stock stuff. And then my red list is all my crypto stuff. So if I go to my watch list, and the reason why I encourage a watch list is just start putting company tickers, symbols in here that you like. So like, I follow Apple, just do some of the biggest ones, Apple's, Amazon, APPS, let's see, Amazon, APPS, I got, maybe 50 companies in here or whatever. But the reason why I have these watch lists is that things that you follow that you want to track and keep up with, I definitely encourage you to have a watch list of stocks that you follow. And after a while, over the years or, over, some long time frame, you'll just kind of watch them and you'll know what their some trains to a weekly chart. Just go through. So you'll kind of get a sense of where these stock prices come from. So here, this is American Tower. This is a cell phone company tower. So your cell phones probably use this company or one or the others, maybe like 3 of them. But this is one of them. And you can see here, I've been following this for a long time, and, goes back to 2009. So you can see it goes back to 1999. But, adjusted price like $20 all the way to, 234, right? So so this is as of 2019, right? So you can just see in my blue lines, just support and resistance. We've covered that in some previous ones. But I definitely encourage you all to get some watch lists together for different stocks that you have. Again, because it's going to just help you determine some particular charts. determine some particular price points, and you'll just get to know what the kind of how that stock behaves at certain prices, what is expensive for it, what's cheap for it, and the longer you track it, the more you're going to become intimately familiar with it. So, any questions around that before we move on? Y'all still there?
Not here.
Okay. All right.
Yep.
Okay, cool. All right. So given that, we're going to talk a little bit about like scaling trades. So really what scaling is, just simply put, is really just like getting into a, scaling. And so it has two pieces to it. So you can say I'm scaling, into or out of a position, right? So let's go. Ken brought up earlier FUBO, right? So we've been talking about FUBO. I say FUBO, but FUBO. It's a streaming stock, right? So you can see here that this is a week. Let me go down to a daily chart. So this is today. It was an abbreviated session today. I think like 9:30 to 1. Wasn't a full session. But then this is Wednesday, Tuesday, Monday. And so you can see here. So let's say, for instance, if I were to, let's talk about, so let's just say if I were going to buy a number of shares. So let's just go through an example. So we're just going to use FUBO as an example, right? So you say, for instance, I want to buy a position in, FUBO, right? And let's say I want to buy 100 shares. So one of the questions is how much of my portfolio do I want to allocate? And let's just say I want to say my full position will represent, let's just say 100 shares, right? All right. Now, what does it mean to scale into a position? So to scale into a position, it really means you don't buy all at once. All right. So let's see so again, FUBO is trading its current price. Let's see what that is. So it's trading at 27.10. All right. So if we say 27.10, okay. So if I'm gonna scale into it, now there's no particular rule around it. So you just kind of figure out how you want to do it. So typically for me, I'll either scale in at I'll scale in at a half, or I may scale in at a quarter, right? And so for that, so if I was going to buy 100 shares, and in terms of my full position, a half would equal, buying 50 shares at a time, or a quarter would be buying, 25 shares at a time. And so the idea is I don't necessarily have to make all of it, have to make the decision all at once. So if I'm looking at this chart, right, I'm saying support and resistance, right? So I'll go here. All right, so say support and resistance. So got a resistance point, 27.57. I'm like, hey, this is kind of the top here. I've hit it two times. And I say this is a support area down at the 19. And you can possibly say this is a kind of even a little minor support here at this 22 level, right? So I could say, you know what, I want to get in this position, but I don't want to buy all the shares right now. And the reason being is that I may think it's too expensive at this point, or I'm just not settled on it. You can have a variety of risks. Like sometimes if I hear about a new stock, somebody tell me about, I may not buy a full position at the beginning. I may just buy a little bit to get in it. And then sometimes it helps me from a standpoint. Let's say you hear about a stock and you've been following a while and it just starts to take off, but you're kind of nervous about it for whatever reason, and you don't want to buy your full position. Scaling is a way to get into it such that, either at a quarter, a third, or fourth, or whatever your increment is, to kind of get you into the stock. And so again, it's the whole idea is don't buy all at once, because it limits some of your risk. But, to the upside. Some of your risk to the downside, right? However, by virtue of that, let's say you pick the right stock and it goes. So let's go back to Fubo, right? So let's say, just for the sake of this discussion, let's say Fubo runs to $32 and I only got a half of the position. So that'd have been a $5 run from 27 to 32. And I only have 50 shares if I were scaling in, unless, as opposed if I bought 100 at a time. I'm okay if I scale in just to have some in it, and I may buy some more on the way up. Whereas that's just one possibility. So in this case, buying a portion of the position as opposed to buying all the time, it would hurt me if there's price appreciation. But by the same token, let's say Fubo went back down to the support level of 22, 95, 23 area, then I would have saved myself, some money there. So again, it just depends upon your style and how you want to do things. But this is what scaling into a position would be. So I can say, hey, if it gets back down here, I want to buy, the other half if I'm doing it just in halves, or if I'm doing it in thirds, and buy a third here and maybe another third here. But scaling into a position has been helpful, for me. So that's scaling into the position, right? Now, scaling out is just the opposite, right? So let's say, for instance, let me give you let's go to another stock here. Give me an example. Let me see something I scaled out of recently. Actually, this right here. I'm actually in the middle of the scale on this. So this is TRMC. It's a little penny stock I've been following for years. So if you go back on a monthly chart, I've been following this, I don't know, probably way back in this area. But I've been following it for a long time. And so I just know kind of where it is currently in terms of the $1.20 to $1.40 area, $1.60, this thing. So that's a monthly. So if I go back to a weekly, you can see here. So these are weekly candles. So just looking at this chart. So if I go to a daily, again, just looking at the support and resistance. So if I just, let me pull this line up here for you a little bit. So I'm gonna put this at the 120 to 125 mark, all right? And let me bring this one down a bit, say to the 150, all right? So one thing I noticed about this, I can trade this thing. So this is just a pattern that I'm seeing over and over and over again in this stock, right? So you just look at the ups and the downs. So I got 1, 2, 3. So, possibly in the midst of a 3 run from the 124 to the 150. Now, in this particular stock, I can again, let me get that away. I can scale in. So let me move these out of the way. So let's say I may want to buy. So right now I had 2,000 shares of this. I sold 1,000 at 150, and I got a trailing stop on the other 1,000 shares at like it's a 5% trailing stop, and that basically says that. So it's trading right now at 157. So the trailing stop is at 152. To get back down to 152, it'll trigger. But if as it keeps going up, it'll just keep trailing this price by 5%, 5 cents. And whatever the highest it gets to, it's going to always lodge 5 cents as behind it. And then if it gets to a point and starts to reverse, then I'm only going to lose 5 cents for whatever the high is. And so, like, say today was, let me see. So today, what's the high for the day? 159. So my trailing stop probably is at 154. So if it goes down to 154, then that'll trigger. But the point is, again, in terms of the scale, I'm just saying that, hey, I'm gonna scale out of this other half at a 5 cent trailing stop. And the reason for that is I sold my first portion at 150. And if I'd have sold it all at 150, I wouldn't even be able to collect this extra 7 cent or possibly even higher. So I know I at least will get, 154 because, like I said, I got trailing stop of 5 cents and it's at 159 right now. But what it allows you to do is scale out of the position because you don't have to make the entire call at one time. That's really what the goal is of scaling in or scaling out. You don't have to buy if you're buying, or you don't have to sell all at once. And it gives you some possibility of participating if the stock goes even higher, but it also does increase your risk because I can as easily as I'm in this position and I sold at the 150, say right here. What if this thing came back down to the 140, right? Now, and this is just so happens that since I have this trailing stop in, I'm gonna be higher than my 150. So I know I'm at least gonna make 154 right now. But so that's really how I use scaling. And so let's take another stock. Let's look at Tesla, for instance, right? So, well, let me stop there before I go any further. So does it make sense in terms of why I say, hey, I scale? So typically, well, let me just stop. Does it make sense of showing just the example of scaling into a position and scaling out of a position and what that means?
Right. Yes.
Yeah,
okay.
It does. Right.
Makes sense.
All right. So, let's say scale out of half. Okay. Now, where I've seen this is that if you got stocks that are running, and for me, scaling out is something that I'm trying to do a bit more consistent of my positions. Because let's say, for instance, let's look at Tesla, right? People have been playing Tesla for a while because you can see here back in March off the lows it's $73, whereas now it's $5.55, and they did a 4-for-1 split. So this is split adjusted 4-for-1. So that really represent it's at 2000 and I don't know, what's that? $2,032 is what it is prior to the split price. And it's just been running. So you can say, well, hey, if you wanted to get in Tesla here and you're like, man, this is at an all-time high. He's like, oh, this, I may not want to buy up here, but you're like, but then again, you saying this thing is running and you want to participate in some manner. And you can say, okay, at 585, that's a very rich stock in terms of getting in. But with the advent of the brokerage now doing fractional shares, even if you had $25, you can buy, $25 of Tesla. And let's say you had $100 you wanted to allocate to Tesla, and you say, you know what? If it's at $100, you say, okay, I may buy all $100 now, but let's say you're just gonna put $1,000 in. You say you may split that $1,000 purchase either into 3 or 4 pieces. So 3 pieces will be, $333. 4 pieces will be $250 a piece. And then you can say, hey, let me scale in because just in case it runs higher. But also, let's say I want to get in Tesla. I know I'm buying high right here, and it may even go higher. And just in case it goes higher, I want to participate in. But I may scale my buying even as it comes down. Because let's say I'm good with buying Tesla, anywhere between 585 and 500. So if I put a price point, say at 555, say 520, and then my last piece at 500, I can scale into 3 different positions there at $333 and get my $1,000 position, and just know that I'll have an average position of 585, 540, and 520. So whatever that math comes out to be, and then you can get an overall position in doing that. So that's one way you can scale into something from a perspective that way. Hey, what's up, David? And so so that's a deal around scaling into a position and using it. If you want to buy something, and it may even go kind of down because you're just trying to build a position in it. So again, scaling is the idea of getting in or out of a position. So if you want to buy into a position, you can break it down into either half of the position, a quarter of the position. And in this case, if I was buying 100, it'd be 50 shares. Or buying 100 shares will represent full position. And if I wanted to scale into a quarter of the position, I'll buy 25 shares at a time. And then just the opposite on scaling out of the position. So that's one thing that you do on the scaling, and for the reasons that I mentioned. Okay. Any questions? Any examples of stocks we want to take a look at, and maybe walk through some examples of scaling for things that you all may be interested in to just see how that would work? Yes, sir.
What's in your opinion, the pros and cons to partial shares?
I don't think that there is any necessarily a pro or con to partial shares. It's just really around if you have a smaller account and you want to buy a higher price stock and you want to use fractional shares, then just buy fractional shares if your broker offers it. So no pro or con. Just it provides you a way to get in something that you couldn't normally buy if you had a small account. That's really.
I'm kind of the mindset of if I can't afford it, I shouldn't be in it. But I guess so you're trying to say if I'm trying to buy some Tesla,
mm-hmm.
I can buy just $100 worth, or I owe the total amount somewhere along the line. How does that work? I don't understand it.
Yeah, so on a fractional share, so let's say, so just look at the math, right? So if you take, Tesla trading at 585 and you only have $100 to put in it, right? So what is that? Let me see. So if you have $100, what would that be? So it would be 100 over 585. So you'll get 0.17 shares, 0.17 of Tesla. And that's just how much you would own. And then for every $1 Tesla goes up, you make 17 cents. It's just what that would equate to. So that'll give you, and you like that, man, that's nothing. But if you got in Tesla at, let's just say, go back here to July, and that's a 241, and you bought a tenth of Tesla, say just 2/10 of Tesla at that point, and it went to 585, your percentage amount is still the same based upon how much you put in. So if you say this represented, 247, so let's just say it's a double, right? Let's just say that's 100%. So you just turn your $100 into $200. Whereas if you were not in Tesla and you took the approach of saying, hey, I don't have enough money to buy a full share of Tesla, so you could have missed out on this whole run because you didn't have down here, $241 to buy in it, and it went to 585. Whereas if you would have brought fractional shares of it, you could have brought a fractional share with your $100, where that would have represented probably about 0.35 of a share. And now that 0.35, whatever that amount is up to here at the 585. So again, if that's $100 that represented at that point, you can just say, hey, you're at 238. That's even a little bit more than a double. So 238 would be 260, like 270, 276. I'm sorry, it'd be 576 on a double. So it's a little bit more than a double. So you got an extra few pennies. So whatever the math comes out to be, but it's just fractional shares. So I mean, it's just, so I wouldn't, if there are higher price stocks that you're interested in and your broker offer fractional shares, use it. Buy the fractional shares if you want to be in it. So like Tesla is one, Shopify is another one. It's another really expensive one. Chipotle or Amazon. Say Amazon, for instance. You know, a lot of us, you know, it's Black Friday, right? People are probably shopping out the wazoo. And it's like, man, I can't afford any Amazon at $3,000 a share, right? But you can say, hey, I can afford Amazon at $100 and buy it in whatever that fractional amount is. So if you say, you know, 230, what's it? 230, I mean 31.95, you know, divided by 100, or 100. Let me do it other one. I'm sorry, 100 by 31.95, right? So you have 0.03 shares of Amazon, and you know, that's cool. Because again, if it goes up 50%, you know, you go from 06 to 0.03. So your $100 will become $200, right? So it's just so it's really no pros or cons. It just gives you the advantage of participate. Well, I would say there is a pro. If you didn't have enough money to buy a full share, you couldn't participate in what that stock performance is without this fractional share deal. So I say take advantage of it if there is a stock that's outside of what you can afford to invest in it in terms of buying a whole share. So, and then one of the things about this, whereas before, say a year or two ago, or even longer, this wasn't even possible because they didn't offer fractional shares. But even on top of it, you had to pay commissions. So commissions will eat up. So if you're putting $100 in here, and you had to pay, you know, say, you know, trades are like $9, right? So if you did this where that was 0.03, now you're talking about 0.028. So you're talking 20% of your investment would have been just in, 10% of your investment would have been allocated just to commissions. So that's 10% profit that you get back because you don't have commissions now. So that's a good thing. So both of those things together really makes it advantageous for small accounts to be able to work with.
Do you own some fractional shares?
No, I don't have any fractional shares. Most of them, like if I have fractional shares, it's because I got a dividend, and when they pay me the dividend out, it just gives me a fractional share as opposed to the whole amount. But most of the time, I can buy most of the stuff. I have some money in an account where I can buy a full share, pretty much most of the things that I want. So,
yeah, that's interesting. I just thought that, like I said, like you mentioned, Tesla or Amazon. I just always felt as though if I can't afford one share, or even if you're waiting for it to split, they'll have to split a lot of ways just to get one good share at that price, at least for the average Joe.
Well, but even so, but think about, so in that Tesla split right after Apple split. So Apple split a 4-for-1, right?
Right.
And Tesla split 4-for-1 This is so really, like I say, this is really the post that 585 on Tesla is really 2340 because they just split 4-for-1 back in August.
I thought they did 5-for-1.
Oh,
Tesla
it may have been.
5-for-1.
I thought it was 4-for-1, but maybe it was 5-for-1. I don't remember.
I think it was 5. Yeah, I think one was 4. One was 5.
Well, I know Apple for sure was 4. I don't know about
Apple
Tesla.
was 4. Because I bought one share of Apple before it split.
Yeah, so Apple was I think it was around $700, 700 and some change. So they're looking at a 175 or somewhere around. May have been
600.
Was it 600? I forget.
More like 600. Yeah, it was more like 600 something.
Okay, yeah, but they did a 4-for-1 as well. You know, so again, if if you wanted to get in Apple and you're a believer of Apple, but you only have $100 to invest to it, and if your broker offered fractional shares, because again, it's the percentages that because a lot of times what happens is what having the fractional amount of buying shares where I think is an advantage is because typically if you have a small account, there's always this what's the right word? This temptation to buy cheaper stocks because you have a smaller amount. So let's say, for instance, say you got an account, so you got $300 in your account, right? And you're saying, well, man, I only got $300. You'll start looking at, so like that one stock I showed you all earlier, this TRMC. You'd be like, oh, this is $150. This is $150. So if I say I take that $300 and I say, okay, $157. Oh, I can buy 191 shares. And the allure is that you can get more shares. Well, it's not even the allure. It's you're drawn to it because you can get more shares. But sometimes you get higher price companies, which is actually, in my case, I believe that some of that higher price companies, they represent a higher class of investment. And for your $300, it really doesn't matter. So if you make 10% on $300, that's $30, right? So if you can earn 10% on that little $1.57 stock, it doesn't matter if you earn it there or if you earn it on Tesla, a 10% up on Tesla, because fractionally, whatever your percentage amount is that you make on it, 10% in this case, it's still going to be $30 if you're starting with $300. So the percentages are just percentages, right? So I think, again, there are some times that you can be lured to those cheaper stocks, and sometimes they may be fool's gold. Now, not all the time. Sometimes you can catch some runners on some very cheap stocks, but by and large, the bigger some profits can be made on some of the bigger price stocks. So
I was gonna say that's kind of where the comparison sounds like is the penny stocks versus the fractional shares of some high price stock.
Yeah. So I will trade stocks sometimes in the $3-4. I got that $1. I don't do a whole lot of $1 stocks. Most all of my stocks are, like I said, so I'll get a Clean Spark. That's a $10 stock, right? Or it was $6 not long ago. I had
about 10 or 11 now.
Yeah, I had an MRO, which is a oil stock. So this, so you just look here in October, end October, it was $3.84 stock. Now it's $6. So it's a double. It's almost a double in a month. Yeah, a little less than a month. Oil stock, right? So that's a cheaper one, but they got killed in the pandemic. So if you look back, what this thing has done, this is at $36 in September 18, right? Down to $3, right? So they got killed. So this is just pandemic. So 13 to 3 or 297, in a matter of January to March. So in a matter of 3 months. So again, some high price stuff. Cheap stuff, it could just because, this one was a demand issue because, people stopped driving, planes stopped flying, went into the pandemic. So it wasn't that much that demand for oil. So they just got killed. Whereas you have some other cheap stocks, they may be new, they may have, a variety of different reasons why they're cheap. So all cheap stocks are not necessarily bad, but if they haven't been established for a long time, I would buyer beware, because if they don't have a long pedigree of being in the market, you don't know what the company is doing. Are they in a good business model? Did they just run on bad times, or are they some new startup? And it could be a variety of reasons. So you really need to spend some time.
Do your research.
And absolutely, and going through the research there. Let's see. So any particular stocks we wanted to look at to walk through a scaling example or possibility of a scaling example? Just tell me the ticker and I'll put it in and we'll walk through one.
Go back to Fubo. Fubo look good.
Yeah, we kind of talked
Fubo
through
was
that
rolling.
one. Yeah, Fubo's done well. Yeah, so again, on Fubo, it just depends upon if you didn't have a position in this, where would you want to start one? So personally, in Fubo right now, I have an order in for $23. I don't know if it's going to get back here or not, but I don't want to pay up here at $27 for Fubo because it has shown that. So just look here. It was at 14, it shot up to 20, and it gave me a chance to get back in at $14.95 from this $14.50 here. So I had a chance to get back in. All right. It got up to 22 here, came back down to 19, got a chance to get in. Shot up to 27, got back down to 22 and some change, 23 right here. So, I want to see if it give me another chance to get back in this $23 range. Because if it gets back in it, go ahead.
When did you? I first got into Fubo at $13.81.
Mm-hmm.
I kind of just rode it because I believed in the company. Just rode it.
No,
I still in it. So I'm just riding it.
No, and that's absolutely great. That's so. Kyle says at 13. Let me see. So we just take this here. So from here to that's wrong thing I was trying to do. Okay, here we go. So so if you're in from say 13, somewhere around in here to here, that's a really good move. And you just look at what the price. What is that price range? Say from here. So that's a 96% gain from here to here. So that's phenomenal. Now, the reason why I sold is I had a decent number of shares and I wanted to take profits. I didn't want to give up all my profits on them. So that's why I've been trading the range as opposed to just buying it and holding it all the way up. Because I was in this 13 area and I saw it go to 20 and drop back down to 15. And I was sick. And I was like, if y'all give me another chance, y'all ain't gonna clip me like that again. And so when it went back up, I ended up selling out. And then I bought back a little higher, rolled it up. And so I sold some in the 27 and then some at the 25. And now I'm trying to get back in this 23 area if they allow me back in. Now, I might miss it and I might end up having to buy it back higher. And if I believe in it and want to go back in it later on, I might have to pay up for it again. But I'm trying to play the odds to see if it's going to come back to this $23 range. And so let's say, for instance, as this example, I want to buy some at the 20. So I say I want to do a full position at 100, right? 100 shares. So I want to buy half at this $23 range, right? And say that's my first entry there. My second entry, I haven't figured out what my second entry would be, but I could figure out another second entry price. So even let's say if I want to say at the 26 level. So buy the first one at 23, maybe buy the second one at 26 and be in it and, figure out what I want my stop losses to be just in case if it goes against me. So I won't, get my hat handed to me. But those are two ways that I could scale into Fubo, 23 and say 26. Now, my 26 is a little bit more arbitrary. If I wanted to technically say where this is a small resistance here, support here. So I could say at this 24.40, even if I wanted to bring it up a little bit, I could possibly, say, hey, bring it up, maybe right there, even with that bar. So I'll say 24.50, 24.52. That could be another entry point right there. So at this 23, and then it's 24.52. But it's up here at this 27. Now the chart is shown that I'm gonna get a pullback. I already got two major pullbacks here. All right. Got a decent pullback here. Got a huge pullback here. Right. So if the chart holds true, I might get one more pullback, but I might not. And so it's just a matter of probabilities if this is going to occur for me or not to get back in at these lower prices. If it doesn't happen and it runs away from me, then I have to figure out, do I want to buy higher? And actually, let's just play this out a little bit more. Let's say this thing runs up to the anywhere from the 30 to 34, right? If it gets back higher, if it continues to go up to that 30, 34, I might scale in, say at a 30 and maybe at a 32, right? Because I may have to end up paying higher for it and scale in, but I don't want to buy my full position at the height of it if it's imaginary up in this 34 range. So that scaling process helps you. Now, let's say, so Kyle, so again, let's just take your example. You're in at 13 and some change. You got 100% profit.
Mm-hmm.
For example, what you could do is, let's just say, you know what, I don't feel comfortable leaving 96 bucks on the table, meaning 96%. Let's say if it gets up, let's take this, say if it gets up to, say, let's make it an even 100% right here at, what is that, 2801. Say you scale out a quarter of your position at 2801. And then say if it gets up to, say 150%, which is the 30, almost 35. Say you scale out another percent, you scale out, you sell another quarter of your percent. And then you say, you know what, I didn't, and here's another thing. So I was listening to a YouTuber and one YouTuber and somebody else recently. And they made a point of saying, when they get up 100% on anything that they're trading, I think this was actually a guy who was talking about crypto at the point, but he says, if I get up 100%, I sell whatever I can to get my initial investment back, and then I let the rest of it ride. And so in this case, let's say if you had 100 shares in at $13.95, so that's $1,300 in, right? What he'll do is up here, he'll sell half of that, get his initial investment out, and then he'll let the other 50 shares just ride. And if they go as high as they go, and he may be watching it to see if he needs to take some profit out of it, if it starts to show a pullback. But that's a case that you can use scaling to, when you're up in a position, to take your initial capital off of the table and then let the profits run. So that's another thing. And I tell you, I've been, so I'll tell you a horror story I had. Let's go to CMG. All right. So I was in right here. It's not even right there. I was in down here at this 230, 250 level. And it came out earnings, they got crushed. I thought it was going to zero. I sold everything at this point. And if I'd have scaled out a half and just waited a couple of days, you see this thing back up to 300. And it went from 300, and I'm still not in it at 13. So you talking 3 to 13, was that a 4X? And I missed it because I made an entire decision to sell right here, my full position, as opposed to scaling out. So this is one where, had I scaled, I may have participated. Now, would I have held it all the way up here? I don't know, because it got crushed here from 900 back down to 4, right? That was a pandemic. So, but even here, it gave me another opportunity to get in here at 4, and I was scared. I should have scaled in. I should have just bought, a tenth of my position.
Some more.
Yeah, just well, and but there are times, and this is, so I'm, I can paint all the rosy pictures and tell you all the good stories where I make money, but don't tell them when I blow it. This is one that I blew it, and I saw it. I saw it here for certain, and I thought about getting in, and I thought about it, and I moved on to something else, and I didn't actually follow through because I know this 400 area is a good buy point. And again, that kind of takes me back to my earlier story, is having a watch list. You know where certain prices is if you've been following stuff. So I can tell you right now, UPS, if UPS gets to $100, automatic buy. And I mean, that's even before I get to the chart. So I can just tell you, you go back here to and so look at my lines. $90, $100, right? I play I played this 3 different times. So I believe I got that one. I don't know if I played this one. I definitely played this one because actually I was in at 100 because I started buying at 105 because this 105 line used to be good before it broke this area and it broke this area. But if you go back to the left, you can see this 105 was golden going back 3 and 4 years. It get back to 103, 103. You go here to here, you make money. You go here, you make money. You go here, you make money. And so it was just like, I knew every time it got to these points, I was just like, this is golden. Buy point, buy point, buy point. Because I should be at least to get to 120 on most of these. So yeah, 120 on these. So look, so if you just take these, if I draw the lines, all right, so you say here to here, that's 1, right? All right, that's 1. Come back again, in here, get out here, that's 2. In here, get out of here, that's 3. In here, that's 104, yeah. I can do that to 117, that's 5. In here, get out here. I mean, so even if I missed those 2 and just had a hard 120, so I can take that one and say, okay, I didn't get out until that point there, right? But that's 1, 2, 3, 4, right? And then again here. And I mean, I'm still back in, what is this? This is February of this year, right? Now I'm not even over into our current stuff. So having a watch list and watching these things, and you put your levels down, and it's going to tell you. And actually, I have to make a confession. When we start doing this support and resistance, I'll show you the stock, one that I missed again. I've been following the stock for years. I know anytime you get down here to 115, it's a buy. You got the 115 here, and actually, so this is a pandemic here, but this is recent. This is as of, when is this here? I'll show you this last one. Okay, here we go, right here. This 120, what's that, 120, put my crosshairs on. All right, so it's at 122. Screaming buy. Got scared, didn't follow my own rules, didn't scale in, didn't buy a little bit, just get a little bit, get in it. Because I know the price point. History has shown me it gets there, it works. Look, here to here, here to here, here to here, here to here. And that's just, in the last couple years. I mean, I can go way back. Look, here to here to here, here to here, here to here, right? It's I know the range for that thing, and it just works. But I didn't buy in. So part of me going through creating my support and resistance, when the chart shows me, I have to listen to it, because if not, I'm just drawing squiggly lines on the paper and doing nothing with it. It's just an exercise in futility. So
we got to do better with the discipline.
Absolutely. And I mean, and you're fine. I mean, I've been doing this a long time, but I still make mistakes. I do. And I'm not afraid to admit them. And you will too. You all. But the thing is, don't beat yourself up over it. There's some things you're gonna miss out on. You try to improve upon them, but then there's some things that you're gonna take, and and it's gonna work out well for you. So
I did. I think I might have did a possible scaling. I got out of Neo.
Okay.
And I sold all my shares after some one person said something and the stock went down, and I took my profits. But then I saw another analyst say something more long term, which is what I'm looking at, and I jumped back in with more shares, and it's doing what I thought it would do. Yeah. So I never should have got out, but I did get out, and I got back in and bought more shares. So it kind of worked itself out. So I kind of dropped my own ball for a second there, but came back and made up for it. Yeah. Because I believed in this company. So.
Yeah. So just drawing a quick support and resistance on this Neo, right? So you can see here, let me see. Yeah. So you can see here on this needle that, so right now you had a support area 56. You had another support. You can, if you want to be absolute, you can either leave it there or you can pull it down here, but somehow just split the difference. So if so that could be a support area back to 50. You got another support area right here at 42 in this general area. You can rock with that. It's pretty much no man's land here up to this point from 43 to 29. But you can just look at this and you can say, hey, well, if you were trading this, you can say if you get down anywhere to 50 to 49, if you believe that support area is going to hold, then you might be a buyer here and see if you can run it back up to 47. So even in that, so if I draw that here, move that up, if it got back down to this 49 area, so from 49 to 57, that's a 15% move. That's huge. If your portfolio can make 15% a year, that's incredible. And again, I'm talking long term. You do that. So there's a rule called the rule of 72, and basically what it says is, let me go back to the. So it's called the rule of 72. So you basically take the interest rate that you earn, divided by 72, and the result says how long it will take in years for your money to double. All right. So if you take like a 15% a year, your money will double every 5 years. A 7%. A 10%. 10%. Your money will double in 7 years. And so let's say if you're fortunate enough to catch a 30%, your money will double every 3.2 years, right? And this is the power of compound interest. This is what you want to be able to get to. So if you can have a portfolio that's doubling every 5 years, right? That's incredible, because if you just take that, if you take 20 years on that, that's a 4x on your portfolio if you can average 15 years. So if you start with $1,000 and 20 years, that $1,000 will be, so you go 1,000 to 2,000, 2,000 to 4,000, 4,000 to 8,000. So from 1,000 to 8,000, that's what 20 years will look like. But now let's throw a zero on that. If you're talking 10,000, you go from 10,000 to 80,000 in 20 years. If you go from 100,000 to 800,000 in 20 years, if you go from 1 million to 80 million in 20 years, just on a 15% interest every year, if you can earn that. Whereas we're talking here, now 15% a year to average over 20 years is very hard to do. So I don't want to, act like that's very easy, because it's to be consistent over that time frame is not that easy to do. But in here, you're talking about you might be able to catch 15%. So look here. I mean, I'm just modeling what's here. This is in 2 days. Well, not 2 days, because it didn't get back there. So if I be accurate, so you got 12% in 2 days, and the stock just happens to be running, right? That's 12% in 2 days. Where if you want to draw it, what has it done since this bar here? What is that? November 5th, day after election, to where we are now, talking 43%, and I don't know what, less than 30 days. So
it's rolling.
Yeah. So this is an anomaly. It can't continue on this trajectory like that, and in this shorter time span. If you take a longer, so if I go out a week, that's just a rocket ship. That's not sustainable. You're going to have a correction at some point, right? And on this one, it's going to get bad. It's going to be bad. It's just that I don't know when it's going to be bad, but it's going to end. This is going to have a reversal. It's definitely going to have a reversal, and you're probably going to reverse probably somewhere. Definitely, it's going back to 40 or 32 on a huge pullback. It just does.
So if it's the next Tesla,
this is unsustainable.
Is it gonna look like a roller coaster? Go up and down. Now it's gonna look like some steps.
Yeah, it could. No, I mean, this is Tesla right here, right?
Steps.
Yeah, Tesla is crazy, right? I mean, this is pandemic. 73 to 585, which is ridiculous, right? You're talking, what's that, a 7x, 8x? Yeah. So you take, 700%, times $1, so $1 is $700. That's ridiculous. Yeah. So just add zeros to it and you see how crazy it gets. So that's it on the scaling. Any other stocks we want to look at as a scaling example to further drive this home? Let's see who else joined. Okay. Anybody? Bueller? Kyle, not Kyle, but Christian or Ken? Any questions?
Nope. I think everything was explained pretty good. I got a good understanding of everything.
All right. What are you all looking at? Let's just talk about some of y'all's ideas in terms of stuff y'all been. Did y'all buy anything this week, Christian or Ken?
No, I did not.
No, not yet. I'm just.
What y'all waiting on? Y'all gonna have to get off sideline, man.
I was looking I saw some YouTube video came up about, I can't remember. I was watching it this week and he was talking about always buying stock in AT&T because historically their dividend payouts have been insane. And I was going to start looking into AT&T. I just didn't do it.
All right, let me pull it up. So here's
I think
AT&T.
that'd be more so of a long-term buy and hold if he's, regarding his dividend. I think he said it was between 7 and 10%.
Okay. Yeah. So this AT&T chart here. So if I just draw some support and resistance on it. So if you're looking at, even looking at this, Cam, I mean, I wouldn't even pay attention to AT&T, but right. As I look at this, you got a triple bottom right here on AT&T. So
what's that price point? I can't see.
27, 29.
Okay.
Yeah, so that's a triple bottom. That's pretty decent. Then if I go out a longer time frame just to see what that represents, that's been a good support area. But you got your next support point at say this 23.90, 24 right here.
Mm-hmm.
So if it did break below that, you got some downside to 24. So you may want to, but that wouldn't. Here would be a decent entry, and if it got back down. Now this could be an example for scaling. Let's say you want to establish a position here. I would be a buyer right here at this 27.29, right? But and let's say just to make the number simple, let's say you was going to buy 100 shares, right? I will buy 50 shares at this level. And if you're trying to do it for long term because you want to earn dividends, I will put another order in at 24 and buy the other 50 shares at 24. And if it came back down here, fine. If it didn't and it went higher, fine too. But that would be an example of a scaling that I would do. First piece here, second piece here. If it never filled here and it just turned around and go back up, then you may look to buy some higher. But at least you'll have your entry at this point. And you say if it got down here, then I would be willing to buy even more.
Now to do that scaling, that's going to be what was it?
You can put it in as a limit.
The limit, the stop,
limit order.
Limit. Okay.
Yeah, you can just put a limit order. So you'll say, for instance, let's see. I'm trying to think. Trying to find. Maybe I can do it here. So you're. You know what? It might be easier to show it here. Yeah, so David, you still on? Oh, you may have dropped. All right, so let's say, so if I wanted to buy, what were we talking about? What was that? T. All right, yeah. So if I wanted to buy that, let's say if I wanted to do 100 shares, so I would do 100 shares. Say a limit order, a price was at $27.29. So that'd be my first one. So it'd be good to cancel. So I buy 100 shares of AT&T, and I say, hey, I want to review the order. Buy 100 shares AT&T at $27.29, right? I can do that there. And then if I wanted to go ahead and put that second order in, then I would say another, well, I'm sorry, I said 100, but it would be 50 because we'd be scaling because we want a total of 100. So it'd be 50 at $27.29. And then we'll go back in and put the second order in at 24. And those will be your two orders in, and you just wait to see if they fill.
Right.
Yeah. That'll be an example of what you would do.
I think I have a limit order in for AT&T at 26, but I'm gonna go change it to 24.
Yeah. Well, but it may not get back down there, right? So if you want to be in now, this is a decent support area. So you look here, it's held here before. It held here before. It became resistance right here, broke down below it and came back up. This is the only area that it broke below, and it hit that 24 area, in recent memory. So that goes back to October of 2008. So you literally got to go back 10 years before you get back to this 24 area. So to me, this is a good entry point. If more bad news happen, then it may get back down there. But I would say this is a strong area. I might actually, I don't know. I'm gonna put this on my thing to look at this to see if I want to take this trade, because to me, from here to this 31. Now, if I'm trading this, so let's just do this. Where's my If I'm saying from here to here, let's just say I don't care about the long term. I just want to trade it. If I buy here and I sell here, that's 14%. I'll take that. That's a good trade. So so you just say, okay, hey, if you get was that 27.19, times 100. So you cost you $2,700, and if you made say times 14, you say 14% on it. So you make $360 on that 2,700. That's what 14% of 2,700 will represent. That's a good trade. I might actually I think I'm gonna put an order in for that.
I can't remember who I was watching on YouTube, but they were talking about buy now, and I was just waiting for the price to drop back down. But
yeah,
it might not.
Well, but even here though, even as I'm saying that, it's not even. I keep saying 27%. I'm looking at the wrong candle. It's right here. It's actually 20. So today alone. No, sorry, not today. Let me go to the daily. All right. So that's what they represented. But you can see when it hit here, it went below, and people saw it, and they done bid it back up. So it's not even 27 anymore. It's actually 29.03. That's what the current price is. So that actually confirms this area, that this was a strong buy area, right? And they've already bid it up. So really, you don't even have that. You don't even have that 14% left up to that sell point. You only got about 7% because it's already trading at 29.03. But you can still put the order in at 27.29 and see if it comes back. It might not. I don't think it will. So, that will be your because you got a gap here too. So it have to go back down, fill this gap, and then get back to this resistance point. Unless it's some bad news or we get some overall market crap going on, that may not happen. But if you say, hey, I still want to get in it for the dividend, you can maybe start, put your first order in here and put your second order below it. And if it comes back down, then you're fine. And then if you wanted to break it up into threes, you could, if you wanted to break it up into threes, you can do that and go, trying to move this darn chart. You can go back to this 24 and put an order in here as well. But yeah, I wish I'd have saw this a few days ago at this 27, because that's a good buy there at 27. So that's, again, I encourage you all, set your trading view up, create your watch list, and we went through on how to do support and resistance. If you've forgotten how to do it, go back and watch the previous thing and just start practicing and create your support and resistance. And as you go through it, so what I'll just show you kind of how it goes. So I'll just go through my charts, right? And I'll say, okay, all right, I'm at a buy point here, and there's nothing there because it's currently trading here. I'm not at a buy point there, all right? Nothing there. All right, next chart. Above my support area there's nothing there. All right, AMT. All right, this is a buy point right here at this 27. I missed it a couple days ago. At this 22.28, it's already at 34, right? I missed that one there. And so when you see something like that, then you just, notate it somewhere and say, hey, so like sometimes what I'll do, I'll open this up, go into my trading. And so I'll say like, hey, so what, I guess it'd be the 30th actually. So Monday would be the 30th. I'll say, okay, what do I need to put on my list? So I'm looking like, okay. And actually I had it on here the other day and I didn't follow through with it. So look, it's on 26. I didn't follow my own thing that I put down. I got it in this one, but I didn't circle back and get into this. So let's go back to the 26. So again, I'm just showing you the mistakes that I make. So on a day, let me go over here. So on the 26th, so right here. So on this 26, 28, 228.84 should have been a buyer right here. It actually went down. It had another day on the 20. 26 is right here. That's weird. Oh no, that's actually 26 is 25th. Oh, 26 would have been. I don't know why it's at 26. Oh, I guess that would have been Thursday, right? So I could have bought today, and actually it got as low. I could have got back in as this 230 or this 229. But this is definitely a buy point. And so even if I go back in here, I put an order in, I go from here to here. So you're still talking 4% move, and it's decent. But I wish I'd have did better and got back here and followed my signal, because that'd have been a 7% move, right? So use your watch list. From your watch list, do your support and resistance, then go through your charts and see what the charts are telling you. Now, one last thing, and we'll wrap this up. You want to be looking also at the overall market. One way you can do that, you can look at the ES, which is the futures for the S&Ps, or you can just go to the SPX. That's another SPX, or SPY, same thing. So you can look at this and see what the overall market does, and you can see if the overall market is trending, because more than likely, if the overall market is doing one thing, then it's going to dictate pretty much how the stocks perform. So if the overall market is going up, which it has been the last few days, even here. So it's kind of been going sideways. So it went down, went back up, went down, went back up. But the last 1, 2, 3, 4, 5, 6, last 6 trading days, we've been up, right? So pretty much I've had, technically these 2 reds are down days, but overall, the overall trend is going higher, right? So that's what you want to see on, you want to see if the market is going up, because if the market is going up, it has a greater effect on your overall stock going up, because this is Standard & Poor's 500 is basically some of the biggest 500 companies in America. And if overall they're going up as a whole, more than likely you're going to see more green represented. So you got some red here, but you're going to see a fair bit of green represented in here as well. And this is on a green day. So, all right. Any other things we want to take a look at before we adjourn? But I want y'all to start looking at that, because let's see what else we got on our notes. Our slides. Okay, so we got scaling, some future topics. We kind of actually started on some of the strategies a little bit, but we can talk about some more. And we've covered a lot of the foundational knowledge already, just in, support resistance, market orders. We got into psychology last week. We're doing a scaling in and scaling out today. We hinted on some strategies. We can get a little bit more this next time. And then afterwards, we're going to be talking about, hey, what your picks are. Why did you choose those? What's the chart saying? And now we got to start getting to work. So we got enough classroom time now to start trying to get out there and figure it out. And so when I say that, I'm saying it more for, and it's going to be dependent upon how much you got to invest in, all of that. But I want you, even if you're not trading with actual money, I want you to start paper trading. Give your pick, give you your points, give me the technical analysis around why you're doing it. And sometimes you might not have any technical analysis. You may say, hey man, I like Beyond. Okay, here's a Kyle favorite, Beyond Meat. I like Beyond Meat. I just want to buy some. And if that's what it is, and you don't have any technicals, fine. But I want you to get into the habit of start picking stocks. And then, more often than not, you should have a reason. You should have very little just because I want to buy it.
I like Beyond Meat. Right,
yeah, but you're going to have to get some more of that. But actually, this was a trade right here. When it got to 125, this was a buy.
It's time to get back in.
You don't hear it. Half of the move is gone if you're looking at this support level. But if you think you get back up to 196, you got $40 plus still left in that thing. If you believe in it and you believe it can get back up there, and then you're just talking about all-time highs, 239. If you can get back up in there, that's a 100-point move. But by the same token, it's 57, 48 to the downside, right? So you gotta consider that downside as well. So
every company that connects with Beyond Meat, they stock goes up.
And that's the thing. I've heard Kyle say that before. So that's definitely a thing.
Dunkin' Donuts showed that to me perfectly. Dunkin' Donuts.
All right. So cool, guys. Definitely appreciate it. Start getting your watch list. Matter of fact, we may start doing some screen sharing on you all's computer next week, because I want to see what your watch lists are. See if you start, putting up your account. So the homework assignment is everybody go out and create a TradingView account. They're free, doesn't cost you anything. Create you a TradingView account, log into it, and start putting some stuff in your watch list. And actually, I'm going to put that down in my notes to check to make sure everybody has that next week for homework. Y'all got it?
Yep.
All right. Create watch list. Cool. All right, guys. I appreciate it. Any parting thoughts, comments?
No, everything was good to me. The scaling stuff was great because I've wanted to know about how to get into the, scaling in and out of the position, and then doing the partial shares of stocks as well. Like if you can't, the rich stocks and stuff that I kind of look at and I can't get into it. I like how you explained that. So that's what I was trying to look into as well. Not just the ones that kind of lower price.
Okay. Well, good. I'm glad that was helpful. And guys, and if y'all come up with stuff during the week and be like, hey, I need to talk about this, let's just utilize the Voxer, and put stuff into, and, we can share and help people out. And then if you got something during the week you want me to take a look at, I can look at it, and then we can bring it back and have it in the call. So let's utilize this. We have been kind of quiet this week, so put your picks in there. And I tell you, I'll say this and let y'all go. One of the things that Peter Lynch, he's an old school stock guy, and one thing that he said was, just look at stuff that you use. So think about brands and companies and products that you use around the house or that you use on your job, but that you're loyal to. It's like, hey, I buy this brand of toothpaste. I buy this, I buy this detergent. I buy these, electronic appliances. I buy these kind of cars. Start looking at the stuff that you consume and that you believe in, and let's see if they're publicly traded and start looking at them. Those are definitely great ideas to give you great sources of ideas to start looking at from a company perspective. And I tell you, there's a lot of other stuff that y'all know that you don't necessarily think about kind of implicitly, and particularly around, hey, just what's going on in the world. Okay, COVID is going on. Okay, there's vaccines. That there's an increased rise in the number of COVID cases that are out there. Start thinking about, is there an investment around stuff that's happening in the world? Stuff that's happening legislatively, stuff that's happening, in your community,
So one of my old coworkers was telling me about how everybody's starting to decriminalize drugs and partly marijuana. And so basically what he said he has been doing is watching the various companies and buying stock, and the companies that are starting to go or have already gone public as far as manufacturing and selling marijuana. I haven't looked in it, but I know he mentioned it to me, and he said it was something that I needed to, watch out for, and I just hadn't had a chance. And he gave me a name of, I think, like 3 companies. I'm going to go back and get those, and I'll put it in the Voxer. But I haven't looked into any of this.
Okay. Yeah, I'm familiar with, I just heard of some of the names. I don't follow the marijuana stocks. I just have a ethical deal with those personally. So I don't follow them. But, that aside, they may be some investing opportunities. Now, one of the things that you can also look at is that if there's going to be a rise in states just doing legalization of recreational drugs or what have you, there's going to be some health fallout from that as well. So is there a way to play the health stuff as a kind of like tangential investment thesis on that? So that's another thing.
Yeah, I think it was Oregon. I think they decriminalized say it was cocaine or something like that. I'm like, wow.
Oh wow, I hadn't heard that one.
Yeah. But yeah, so that was one thing that he threw out to me, and I just honestly hadn't looked into it because I kind of had the same idea. Like I don't know about that. Buying stock in those companies and what the blowback is on it, and so.
Mm-hmm, mm-hmm. Cool. Any other things that y'all can think about, trends or things that you all are seeing? Another thing I would say, watch the commercials. If you start seeing a commercial around a particular, product or service that you haven't seen before, and it's in heavy rotation, just pay attention to it. Find out what the product or service is. If that company, and you can pretty much Google whatever X company is X company, publicly traded, and Google will tell you. And then you should be able to come up with a ticker and get to a chart, so. Cool. But thank you all. I think we're making good progress. After a while, we're going to be, have a good level of baseline information kind of in the tank, and we'll be able to actually start, talking about some specific companies and trades and those kinds of things. So, with that, I think we'll end here. Definitely appreciate everybody's time, and we'll talk next week. Don't forget to do your homework because I will be checking.